Let me now welcome on board Mr. Jagannathan Chakravarthi. He's the CFO at Sonata Software to talk to us about the order that they have bagged. Hi, Mr. Chakravarthi. Good to be speaking with you. Correct me if I'm wrong, but isn't this the order that you had earlier announced in Q1 itself? Or is it a fresh order? And overall, how's been the ordering momentum in Q3 so far?
Yeah. Good morning, all. Thanks for this opportunity to ET now. With regard to the order, this is a press release, and the earlier what we announced during the analyst call, it's the same as what we are. The process what we follow is all these things have to be approved by the customer. Hence, after the approval, we give a press release to this. But however, when the deal win happened, we announced the special with the special focus to analyst. We announced the deal at the time of analyst call because mostly that is the only call where management speaks to the analyst. The second important point is Q3 order book. Order book has been very stable, and we are seeing green shoots in BFSI and healthcare, and we believe that this trend will continue for some time, and think that H2 will be better than the H1 for us, both in order book as well as in terms of revenue.
Right. Very good morning to you, Mr. Chakravarti. Cheryl also joining in the conversation. So, if you could talk to us about the segments or the areas that you're actually seeing some momentum when you talk about the deal wins.
Yeah. So as mentioned in my earlier answer, BFSI and healthcare is showing some a good green shoot for us. BFSI is also like consumer banking and retail banking area. We see a lot of opportunity coming up for us. The In case of healthcare, particularly the service provider side, we see a momentum coming back in the deals what order book pipeline as well as the deal what we won and the revenue recognition. We see these two verticals will continue to do well and think that this is going to help us gain the momentum in H2, which will be better than H1.
Okay, so BFSI healthcare continue to do well, but what about TMT and retail? When do you expect a bounce back there?
Yeah. TMT, I will not say there is a downside. With our large customer, there are fluctuations. So it will be for sometimes we expect this fluctuation to continue. Means couple of quarters they will do well, couple of quarters they may be soft or they may retain at the same level. But this will continue for some time because they are also trying to optimize the investments and get the return on investment for their investment in AI. However, we see the high tech has potential for us because many other second level software companies also want to bring in the Gen AI into their product, and all of them have some plans for integrating the Gen AI into their product, and we see there is a lot of opportunity that can come in sometime now. The capital spent by these companies haven't started, but we see a lot of inquiries, and we believe that in the next couple of quarters there is a potential in high tech. Coming to this retail is very soft for us, and there are some opportunities in digital marketing in case of retail, particularly e-commerce side of it. But other retails are very soft still. The inflation in US hasn't come down, and we don't think it is going to come down in the next couple of quarters, and don't see the potential increase in the spend when it comes to retail. Manufacturing has some green shoot. We do see there are opportunities in manufacturing, but manufacturing is little less for us. Hence, we think that this retail manufacturing and distribution may not grow very strongly in the coming quarters. But high tech can be a turnaround candidate in couple of quarters.
It can be a turnaround segment for the next couple of quarters, but not really retail. That continues to be soft, of course, barring the e-commerce space as you talked about. But I also wanted to get a better sense from you with respect to the overall, kind of momentum that we have seen the client behavior after Trump 2.0 coming back. Do you expect that client budgets are going to be significantly better in 2025 versus 2024?
The current trend shows that we believe that 2025 will be better than 2024, definitely for sure. But is it going to be like double digit or no high teens kind of a growth for anybody? It's a little doubtful now. We have to wait and see how the next 2 quarters rolls out and how the budgets are being released by the customers in January, February. We'll have more light on that. But as it stands today, 25 will definitely be better than 24. But will it go back to the low teens or high teens growth? I doubt that. Definitely, it will be better than 24.
Right. Just wanted to understand about the healthcare deal that was expected to dilute the margins a bit in the near term. How is that playing out so far?
The margin we have mentioned specifically, there are salary increases to in Q2 as well as Q3 that is going to have some impact. We have signed a very large deal where print out, no, we have reached a batch people in on-site, and definitely that there is a transition plan to offshore in the next 3 quarters. Only after 3 quarters the margin will improve. These kinds of deals also comes up with an investment, AI investment to build a AI platform for them to run their show. So that will also be an dilutive on margin, and we believe that this will stabilize by Q1 of next year. We are very confident at present that Q1 of next year we will be in the early 20s EBITDA margin.
Okay, so you're expecting to be back in early 20s by Q1 of financial year 2026. If do I have it right?
Can I get the question again?
I'm asking you whether the margins will be back in the 20% plus range by Q1 FY26.
That's our current assessment. We definitely see a light to reach the early 20s EBITDA margin by first quarter of FY26.
Point taken. Overall, with respect to the Q3 momentum so far, are there furloughs which are on expected lines? Is it higher than usual? What's been the reading of the Q3 execution so far?
Furloughs are not a great impact for us. Furloughs are there, but it's not a great impact for us. We believe that Q3 will be definitely a better quarter for us compared to Q2, and we believe Q3 will be better quarter for revenue, but lower on margins. Q4 will be better quarter for margins, but little lesser than Q3. Overall, H2 revenue growth as well as margin will be better than Q1, H1. So that is what our assessment as of now, and we see that the opportunities continue to be there in Q3 in spite of holiday seasons and impact on the particular few businesses actually.
Let's talk about the Gen AI opportunity then. How is it looking for the company? Are you seeing significant progress on that particular front? Any order wins or any orders in the pipeline when you talk about the Gen AI opportunity?
Yes, of course. Gen AI is actually another major technology change for all companies now. And the cloud, which was there, which was a change, digital cloud, all these changes happened earlier. Gen AI is the next important trend, and it's definitely going to have a significant impact on all the businesses in the coming days. That's our assessment. And we also see quite a lot of pipeline. Gen AI is improving it, but there are uncertainties come with the technology trend. So when it comes to the customer, all customers want Gen AI to be imbibed into their proposal. However, when it's going to be a large investment, they think that whether this is the final technology or should I wait for some more time to get the full view of the technology to implement at the right time. So these questions create an uncertainty and not getting a large deals out of AI. But definitely there is quite a lot of momentum in Gen AI order books now. Coming to this, the second aspect of it, which is Microsoft Fabric, which is a data platform, we see significant trend development there. We had $46 million of order book in Q1, and it improved to $91 million of order book, not order book, sorry, pipeline. $46 million of pipeline converted to $91 million of pipeline in Q2. This is very significant development for us, and we see there is quite a lot of potential. And during the quarter two, we have announced one deal which is completely a couple of $1 million of deal, completely driven by Microsoft Fabric. And we also won a deal in Europe, manufacturing company AA deal, which is a significant move for us compared to the current what it was in Q1. We see the potential that these two areas are going to drive the growth in the next couple of years.
Okay, on that note, we'll let you go. Thanks so much for making time and speaking with us today. So that's the management of Sonata Software, talking about how margins might be a bit diluted on account of big investments that they're making in the near term, but expecting to bounce back to 20% plus levels by Q1 FY26, and overall the deal momentum continues to be quite strong.
If you like this video, then like, share and subscribe to ET Now.